What the?
Hello, everyone. Can you all hear me?
Hello.
Yep.
Guys, do you have any questions before I start that I need to address from the CVP chapter?
No.
So yesterday we did the cost volume profit analysis for one product for sales mix. We did the margin of safety. I think we did more or less the entire. Uh, the only question left is the one for absorption costing, cost under absorption costing, and variable costing. So I'll finish that, and then that would help me to move into the next chapter on variable costing. So, so I'll start with that. Now, just for, I'm assuming everyone has joined now. So just to make sure some announcements. April 6th is a no class day, so we are not meeting on April 6th. April 8th is your exam 2, and all rules will be same as for the exam 1. You're supposed to log in, keep your cameras on. I'll take the attendance. Uh, the exam will open 5 to 10 minutes before the scheduled time of 12:30. So I'll open it from 12:15 to say 1:45. So that'll give you extra 15 minutes as I did it last time. You can have 2 pages of cheat sheet, and so again, nothing changes, nothing is changing. And I believe you had a 70-30 split between multiple choice and short problems. Do you still want to maintain that, or do you want to change that?
Thought
I
it was
like
good.
Yeah, I liked.
Okay, so your split is 70-30. That will continue. I will make the exam accordingly. On April 13th, we will meet. On April 15th, at this point of time, I'm thinking of taking a personal leave. So we may not meet on April 15th. Just letting you know, I'll confirm it later, but that's what I'm thinking at this time. So just letting you know upfront for that. So your April 15th will be more or less your online class. You will be working on your own. Okay, so those were the quick announcements that I needed to make.
You say exam 2 was on the 8th?
April 8th, yes.
Thank you.
Yeah, we should be by the end of next week, that is by 18th, we should be done with the material, and then I'll actually get into the material for the third or the final exam also. Okay.
Since we're ahead, could we have like a day like we did last week to like work on one of the chapter's materials and then like come back the next class meeting and ask questions like how we did for chapter 17, I think it was. Since we're like basically a week ahead.
Yeah, what would happen is on the
Because
I can-
it gets confusing like when we learn stuff for the third exam before we have the second exam. Like it kind of stacks on top of each other and it gets even more confusing. I don't know if that's understandable or
I agree.
because
uh,
I don't want to just stop working, but like I feel like that day where we had to work and do all the material and then come back and ask
so
questions.
you want to have one day on your own, kind of.
Yeah, like we did last week for chapter 17.
You tell
Yeah.
me which day you want, and I can arrange. It's not a problem. Means after I finish the material for the second exam, I can give you a day off or whatever you want.
Okay,
Even
yeah,
if we had class and just talked about the past chapters for the second exam, that'd be better instead of moving forward, in my opinion.
Whatever you want. I have no issues with anything.
yeah, like even next week if we like took Tuesday off to do chapter 18 and 19 material, like since we're learning 19 today, we learned 18 on Tuesday, and then we take like next Tuesday to do our homeworks and stuff, and then we come back next Thursday and like ask any questions we have, and we can kind of review
let's
our
be
chapters.
So let's be specific. Today is 11th, right? So you want March 16th off? Or March
Yeah,
23rd?
yep. The 16th, yeah, because that would be next Tuesday. So yeah, like take that day off to do our homeworks and our quizzes and stuff.
Okay.
And then next Thursday, which would be
I lost you.
the 18th. Sorry, I was checking my calendar.
Okay.
Then come back next Thursday on the 18th and ask questions about 18 and 19.
I'm fine with that.
Okay, because I feel like that like having a whole day to just kind of set aside to do the homework and quizzes for a chapter
Means
works really well for
your
me.
class fellows have to agree to that. If they agree, I have no issues with it.
Okay.
I
Yeah, I
agree.
like the idea of doing that.
I see no issue with it.
Okay, so basically, once I finish 12th, then I will see you on 8. Once I finish today, then I'll see you on 18th, right?
Correct.
Yes, sir.
Okay.
Yep.
I have no issues with that part. Okay, anything else? Okay. At this point of time, you should be able to see an Excel spreadsheet.
Yep.
Yes, we can.
Okay. So what we would talk about is today absorption costing versus variable costing. So in the contribution, in the break-even chapter, you have already seen in this chapter that sales minus variable cost gives you the contribution margin. Now, to find the cost using absorption versus variable costing, we will need to define two more terms, the product cost and the period cost. Now, what is product cost? As the term, as you know, we are accountants and we are very, very creative people. Product cost basically means the cost of the product, right? That's all it is. So what is the product cost? You have already seen that. That is direct material plus direct labor plus manufacturing overhead. And this you have done number of times. Any question about that part, please? So the cost of manufacturing the product is your product cost. Period cost is basically all other costs. That is your selling and administrative overheads. Now, manufacturing overhead, you know, could be fixed or variable. Any questions until now, please? Under absorption costing, we use fixed plus variable both. Under variable costing, the product cost only includes the variable cost to find your contribution margin. If you remember, Under variable costing, we had sales minus variable cost equal to contribution margin. So under absorption costing, we include both fixed and variable. Under variable costing, we only include variable manufacturing overhead. Is this difference clear?
Yes.
Yes, sir.
So what we are going to do is then try to do one of the problems relating to cost computation under absorption costing on chapter 18. So as we said, we need to find the product cost under absorption costing. So what do we have under here? You've got direct material, direct labor, variable overhead, and fixed overhead allocated at 780, giving you 4720. So that's your absorption costing product cost. So data has been already given to you, direct material is given to you, direct labor is given to you, variable overhead is given to you. So those three come as it is. And then you've got overheads of 140,400 divided by 18,000 units at $7.80 is the allocation for that unit. Fixed overhead cost that is allocated for that unit. Okay.
So I had a question. Is the variable cost like the rate per unit?
Yeah, it has to be some rate per unit.
Okay.
Yeah, because it will change for every unit. It gives you variable head 980 per unit. Yes. Sometimes it could be using another basis also instead of units, not necessarily units.
Okay, I got you.
But it is variable in nature. That is, it changes with the level of activity. In this case, the units is the level of activity, so it is changing with the level of activity. Like we did in activity-based costing, we had number of different bases to allocate the cost. Does that answer your question, please?
Yeah, I just wanted to make sure I was thinking the right thing.
Okay. So more or less now compute cost under variable costing. So obviously we are just using the direct material, direct labor, and variable overhead, and you got that. Okay. Are we good on that, please?
Yes.
Okay. So what is the implication of this difference? So suppose you made or you manufactured 5,000 units, right? Out of which you sold 4,000 units. That means whatever is in the ending inventory is 1,000 units. Right?
Right.
So if you think about it a little bit, in this case, your variable cost per unit is 3760. So keep that in mind. Come on. It'll change the numbers on me. So it changed the number a little bit, I guess. So I will write it down 4440.
We can still only see your Excel.
You can only see Excel. What can you see now?
We can see it now. The question.
Did you see it earlier when I was explaining it?
No, we couldn't see it. I was a little bit confused where you were getting numbers from.
Okay.
I wasn't sure if you were just making them up or if you were reading them off somewhere, but then I figured out that you were reading them off somewhere.
No, I'm not. I was doing it from the your chapter 18 homework. I'm sorry. And at any point of time, please feel free to interrupt me, because sometimes what I'm seeing, I assume that you were seeing that. That's why I kind of, it seems that even if I bring the material to the first screen, it does not share automatically. I have to share each screen separately.
Okay.
But feel free to just, okay, I'll just start again, okay?
Okay.
You understand the difference between the absorption cost and the variable cost?
Yes, sir.
Okay. Now, so in this case, your direct material cost, direct labor cost, so we have to compute the unit cost under absorption costing. So your fixed overhead are 78,100 for 11,000 units. Gives you $7.10. So I will just note that down, $7.10 somewhere. And your total unit cost is 4440. First of all, any questions on 4440?
Nope.
Nope.
Okay. Now this is under variable costing. Let's assume for the time being the overheads in the previous problem and this problem are same. Maybe I should just use that. And in this case, the variable costing, your costing is the first three items at $43. No fixed overheads were concerned, were computed. Can you see the Excel sheet or not?
No, we can't. We still see the homework.
Okay. Okay, let me do another way so it makes it easier. Somehow or the other, when I connect my tablet to it, it just kind of I try to become fancy, but it doesn't work. Okay, so over here, first of all, if you were to compute the fixed overhead per unit, how much would it be? If you were to compute the fixed overhead per unit, how much will it be?
$9.
Pardon me?
$9.
$9, right? So that is 270,000 divided by 30,000 units. Okay, is everyone with me on that part, please?
Yes.
So your variable cost is your direct material, direct labor, and variable overhead for $43, right?
Yep.
Yes.
So variable cost is $43, and your absorption cost, if you add the $9 to it, it'll give you what?
52.
$52, right? So the difference between the two costs is due to the fixed overhead allocated. So now I want you to see what can you see now?
So,
So,
Excel sheet.
Yep.
So suppose under variable costing, as we said, your cost is $43, and under absorption costing, your cost is $52. Is everyone okay with that, please?
Yep.
Yep.
So if you think about it, when you manufacture 5,000 units, you sell 4,000, you're in the inventory, you've got 1,000 units left. So your cost of goods, so your cost of goods sold under absorption costing and your cost of goods sold under variable costing will be how much? So how much will be your cost of goods sold under variable costing?
Would it be 172,000?
And how did you get that?
43 times 4,000?
So 4,000 is the number of units and 43 is your, very good. So what will be the cost of goods sold under absorption costing?
208,000.
208,000. Right? What will be the value of ending inventory under variable costing?
43,000.
And under absorption?
52,000.
Okay, does everyone understand that part, please?
Yes.
So you already know this part now. The difference between these two cost of goods sold is 36,000. Right?
Yep.
And that 36,000 is due to what? Due to basically
Fixed cost.
$9, that fixed overhead,
Yeah.
times the 4,000 units, right? We have already done that. We call it reconciliation. So in this case, if your cost of goods sold is higher, if your cost of goods sold is higher, means your profits will be lower or higher than the variable cost.
Lower.
Lower.
Because the cost of goods sold is higher, right? Now the reason, again, the difference over here of is 9,000, which is due to 1,000 times 9, right? Same reason like we had above, because we didn't take into account the fixed overheads. I want you to make sure that you understand the difference and the reason for the difference. So if your cost of goods sold is higher, your profits will be lower, as you said, lower than the variable cost. Now, when is that true? It is true when you have sold less units than you have manufactured. So when you have manufactured more units than you have sold, then what happens is part of the cost gets into the inventory. You notice that? So 9,000, the cost has gone into the inventory. Same way here, there's a difference. Is everyone good till now?
Yes.
Yes.
Okay. Okay, I'll hold here for a minute. Okay, I'll come back to this again. I just want to make sure that you have understood the concept. So I want you to do one problem. You should be able to see my Connect screen now.
We can.
Okay, can you give me the unit cost and the absorption costing, or can you confirm this number, please?
51.20.
Yeah, just confirm this number, make sure that everyone understands it.
I got it.
Yep, me too.
Everyone got it?
Yep.
Ask the questions, please. If you, here is the description. Just added the fixed overhead at 880. Same question, just different numbers. That's what I mean. Once you understand the concept, they are all simple. If you try to memorize these things, it will never work. Okay, so everyone is good with this, please.
Yep.
Okay, try this one, confirm this one, please. Got it?
Yep.
Yep.
Hunter Koss,
Yes.
you are my advisee also, right?
What was that? I didn't catch you.
You are my advisee also, right?
That's right. Yeah.
Okay. Because somehow the other I remember that name because I was just, I'll be sending all advisee an email with the course registration information. So it should come within few days, couple of
Okay.
days. I'm working on it.
Sounds good.
So if you have any questions after that, basically, just let me know.
Will do. Thank you.
Same goes for anyone else who is with me. I'm finished. I just got the advising sheets yesterday, so I'm working on it yet. Okay. So here is another question now. Information is given to you. Units sold 16,500, ending finished goods inventory 6,000. Units produced 22,000. So very similar to what I gave you the example before, where the number of units manufactured are more than the number of units sold, right? Any question on this information?
Nope.
So based upon this information, I'm assuming you can find out what is the cost of finished unit under absorption costing. And if we were to determine the cost of inventory using absorption costing, you got 6,000 in the ending inventory, 6,000 times 33 gives you 198, which we did just now. Same thing with the cost of goods sold using absorption costing. 16,500 at $33 a piece at 544, 500. Is everyone good with this, please?
Yes.
So it's a very similar example that I was working on the Excel sheet. How did you compute the fixed overhead? You know that. Finished goods inventory and cost of goods sold using absorption costing. You can do the same thing using the variable costing. Here it is. Can you confirm these numbers, please? I want you to confirm these two numbers, 201,600 and 624,000. This is under variable costing. Make sure you can confirm these two numbers, please.
I got the same ones.
Got it, everyone?
Yep.
So $24 per unit times 8,400 and $24 per unit times 26,000. Any questions from anyone, please? Again, in this case, units produced were 34,400. So you produced more units than what you sold. That's why your income under absorption costing is lower. Now we'll prepare a variable costing income statement, which we have done earlier. It's the same thing. The format is sales minus variable cost. All the variable cost gives you the contribution margin. Remember, I'm not asking you the product cost here. So sales, so variable costing income statement, the format is sales less variable cost gives you contribution margin minus fixed expenses gives you the net income or loss. That's what we did in the CVP chapter also. And absorption costing income statement is the same as you made in 201. So when you made the income statement in 201, that was basically your absorption costing income statement. That is sales less cost of goods sold gives you gross profit and minus all other expenses gives you net income. Okay, first of all, does everyone understand the format? Sales less variable cost gives you contribution margin minus fixed expenses gives you net income.
Yep.
So you have got the numbers over here. Variable product cost is given to you. Variable administrative cost is given to you. That's that part. Then the fixed expenses are given somewhere. 60,000 and 64,000, 64,000, 60,000. That's straightforward an income statement. Now, under absorption costing, the format, as I said, is sales minus cost of goods sold gives you the gross margin. Gross margin minus selling and administrative gives you the net income. So sales minus cost of goods sold gives you gross margin minus selling and administrative gives you fixed income. In this case, you have both your fixed and the variable manufacturing overheads are included in the cost of goods sold as we did earlier. Less selling and administrative expenses gives you net income. So you should know what the format of income statement under absorption costing and variable costing is. The last thing which we will do, next thing which we'll do in this chapter is the difference between the net income under absorption costing and net income under variable costing. And we know that difference is due to the fixed overheads, because the cost of goods sold charge is different. So I'm going to go back to my Excel screen. So if you think about over here, if the number of units manufactured is more than the number of units, are you seeing the Excel screen, please?
Yes.
Yeah, we are.
Okay. So that means your absorption costing, cost of goods sold is higher by 208,000, by 36,000, whatever we did, 4,000 times 9, 36,000. That means to that extent, your income will be lower because your cost of goods sold is higher. Does everyone understand that concept? Means if you're charging more to the income statement, obviously your income will be lower. Under variable costing, you're charging less. Anyway, so I'll show you that as well. That's the next thing I'll talk about now. That is the okay, I am back to the connect screen. Can you all see that?
Yep, we can
Yes.
see it.
Okay, so until now, what we have done is two things. We have done how you compute the absorption unit cost under absorption costing. Then we have done the unit cost under variable costing. We have done the variable costing income statement, and we have done the absorption costing income statement. And we have anticipated now that the difference between those two income statement numbers will be primarily due to the fixed overheads that have been allocated. Whatever I said, does it make sense to you, and do you all understand it?
I understand.
Everyone, please say
Yes,
yes
sir.
or no. I can move forward then.
Yep.
Okay. Let's move forward. So now we are putting both the variable costing and so prepare an income statement using absorption costing, so you can do that. And in this case, you will notice that your selling price is given, obviously, and then direct material, direct labor, and the variable overhead is given to you. Fixed overhead per year is given to you, and fixed selling and administrative are given to you. So you have to compute the absorption costing income statement. So please notice over here in the first example, we are using that the units produced and sold are same. Okay. So there is no ending inventory. That's the first scenario. In the previous scenario, when we were doing it on Excel, it was different. The units produced were more than the units sold. Okay. So in this case, when you compute the cost under absorption costing, your net income is 2,646,000. Now, does any of this thing bothering anyone, this format? Sales less cost of goods sold gives you gross margin minus selling and administrative gives you net income. Anything that is bothering you? And under variable costing, you notice that the net income is same because nothing went to the ending inventory. Everything produced was sold. It's just how the variable costs are segregated from the fixed costs. Questions here? Does everyone understand that part, please?
Yes.
So when the number of units produced and the number of units sold are same, your variable costing income statement and the absorption costing income statement will give you the same results because instead of fixed overhead being here, they're just going below the line. That's all the difference is. They're just going over here. Okay? It's just they're just going after the contribution margin instead of going before the gross margin. Okay, I assume that you understand this. Okay. Okay. Now, this is probably the toughest part of the chapter, and I will show you this. I know you already intuitively know the answers to this, but I'll just show it to you. And please feel free to stop me whenever you want. So we have got the similar information that sales total 56,000, but its production was 86,000 units. So you know that there were more units produced than sold. So 86,000 minus 56,000 gives you 30,000 units difference. So that's the information we got from here. Okay. Does everyone understand this part, please? Okay. So sales is given to you, variable manufacturing expenses, selling expenses are given to you. Your fixed overheads, that is the manufacturing one, are given to you at 395,600. Now, when you allocate the 395,600, will you allocate it based upon 86,000 or 56,000? Hello, everyone.
56,000, because that's how much you sold.
What are these overheads for? You got selling and administrative here, so these are your fixed manufacturing overhead, right?
Right.
So if it is fixed manufacturing overhead, once again, would they be allocated based upon the units manufactured or units sold?
Manufactured.
The units manufactured. It tells you they are manufacturing overhead. They are not selling and administrative. Okay. Does everyone understand that part, please?
Yeah, I understand now.
Yeah, it tells you it's a fixed manufacturing overhead, so it's based upon manufactured.
Yeah.
Okay, so absorption costing income statement gives you cost of goods sold, variable manufacturing cost, and the fixed overhead cost of 257,600, which is basically 395,600 divided by 86,000 units at 460. So Is everyone okay with this absorption costing income statement?
Yep.
Yeah, it means basically it's the same thing. There's nothing very different. You got 3320, you multiply that by your fixed overhead to get 3320. Now, what is important is this $4.60. What is this? This is the fixed overhead allocated per unit. I need everyone to understand that part, please. Any questions on 460, please?
Nope.
Okay. So someone note that number down, 1,325,400. Now, if you go to the variable costing, I should do one more step. Now, can you just give me a number for variable costing income statement, please? Use the same numbers and give me the number for variable costing income statement. Is the question clear to everyone, please?
Do you want like the per unit or the total?
No, the total. This is your absorption costing income statement,
Oh, okay.
and this is your variable costing income statement that's given to you. That's how you'll prepare it, right? Means I was asking you to just confirm you understand that this is income statement and the variable costing.
Oh, yeah, I got you.
You've got variable expenses gives you contribution margin minus fixed expenses gives you net income under variable costing. Okay. So under this again, you notice that your variable costing income statement is at 1,187,000 and your absorption costing income is under 1,300,000. 1,107,000. So the difference between the two income is how much? Between these two income, the difference is how much? $1,325,400 and 1,187,400. Okay. You should be able to see my Excel spreadsheet now. Does everyone see the Excel spreadsheet?
Yes.
Yes.
Okay, so your difference is how much?
138,000.
And everyone understands the reason for the difference. The reason for the difference is basically you produce 86,000 units, you sold 56,000 units, right? So there were 30,000 units in the ending inventory for which fixed cost needs to be accounted for. So your absorption costing income is higher by 138,000 compared to the variable costing. Why? Because of the ending inventory. Under ending inventory, your variable costing inventory is at 43,000 and your ending inventory at under absorption costing is at 52,000. So to that extent, that cost has not been charged. And it when that manufacturing overhead cost was not charged to the extent of 9,000. And that is creating the difference. Same thing over here. You've got 30,000 units at 460. Your absorption costing ending inventory is higher. If you remember, if you have beginning inventory plus purchases gives you total cost of goods available for sale. If you take out the cost of goods sold, that gives you the ending inventory. So if your beginning inventory is say worth 1,000, your purchases are worth 25,000. That means your total available is 26,000. Out of which if you sold 22,000 worth, that means your ending inventory will be 4,000. Or if you change the numbers a little bit, oh, are you all seeing the Excel sheet?
Yes.
If you change the numbers, suppose you say this is 2,000 and your cost of goods sold is say 15,000. Again, if you this can either be allocated to the cost of goods sold or ending inventory. So if more is allocated to the ending inventory, less, I should keep the number same actually. So again, cost of goods available for is same. So if your cost of goods sold is lower, your profits will be higher. If your cost of goods sold is, sorry, I said the wrong thing. If your cost of goods sold is higher, then your profits will be lower. If your cost of goods sold is lower, your profits will be higher. So if more goes to the ending inventory, then less goes to the cost of goods sold. And when you use the absorption costing, your inventory, ending inventory value is more if you manufacture more than you sell, right? The per unit cost is more because of the fixed manufacturing overhead. Okay, do you understand the difference, the reason for the difference here, please?
Yes.
Yes.
So that is due to your 30,000 units in the ending inventory times 4.6, which was basically your overhead cost per unit allocated. So now what we are saying is in part 2 here, convert the variable costing income statement into an absorption costing income statement.
We can still only see the Excel.
Okay, sorry. Can you see the connect now?
Yep.
So first of all, what we did was we saw that the variable costing income statement, the net income is lower than the absorption costing. The reason being that more units were produced than sold. So when the units produced are more than the units sold, you will have a higher allocation to the fixed overhead. The cost will basically get hidden in the fixed overheads in the inventory, and that will lower your cost of goods sold and increase your net income. First of all, everyone should understand that basic part. Okay. Any questions over there, please? So I know that if my variable costing income is 1,187,400, that means my absorption costing income will be a little bit more. How much would it be more by? It would be more by 30,000 times 460. And this is what we call as the reconciliation between the two. So if you have one number, you can basically find the other number. So if this was a multiple choice, for example, and you were to give, you were to find out what is the absorption costing income, then you could just do this and you'll get the absorption costing income. 30,000 times 460 plus you add to the variable costing here. That's it. You see what I'm saying? Hello, everyone. Say something.
Yes.
Yes.
So I need you to, anything that is bothering you over here, let me know. And the reverse is true. Suppose you were given the income under absorption costing, you can come to the variable costing income by subtracting it in this case. Please remember, this holds true when units are manufactured are more than the units sold. It will reverse if the units produced are less than the units sold. So suppose some of the units were used from the beginning inventory. There was certain beginning inventory and you used it from there. Then those costs in the ending inventory will get released and the reverse will be true. Okay. Here is one more thing. Under absorption costing, you are suppose 10,000 units were produced. So this is the cost for the 10,000 units. Now that it says compute the total product cost if the number of units produced were 12,500. So what will change over here? Oh, can you see the connect?
Yeah, we can see it.
Okay, so what will change over here if you were to do it for 12,500 units?
The fixed overhead.
So fixed overhead per unit will go down, right?
Yep.
So 67,000 by 12,500. Then if you add it up, that should give you 540. That's the only thing that will change at 1860. So as we said earlier, if the production is greater, then the sales cost of goods sold and absorption costing will decrease and your income will increase. That's what we did earlier. Okay. So why don't you do these problems now? So more or less I've covered the chapter 19, or actually not more or less, I have finished all the problems in chapter 19 now. So now, as we agreed, we are meeting on 18th.
That's right.
So you will do the problems on chapter 18 and chapter 19, and then bring any questions you have to me on 18th.
Sounds good.
Sounds like a plan.
Okay. Have a nice day, everyone.
You too.
You too.
You too. Thank you.